get started here. And so I'll be starting off the evening. We want to thank everybody for coming. We know that you have options on what you're going to be doing on your Wednesday night. So we appreciate that you're showing up here. Remember, think massive, be massive, and take massive actions. So tonight we're going to be doing a review of our virtual conference that we had last Friday. It was an amazing conference. So it was a really amazing, just so much great content, a lot of good speakers. So we're excited, and Shrar is going to bring us through all of the day. I don't think anybody even had time to get up, and it was like when we were all done, we all met at a restaurant, and it was like everybody was so tired, but it was such a good day to share and learn and be connected with everybody. All right, Jasmine, let's get rolling here. So if you don't find a way to make money while you sleep, you will work until you die. Such a powerful statement. Everybody needs to think about this, that you need your money to work for you. And obviously investing in passive investing and multifamily, other syndications provides that mechanism for you. So we're live on Facebook, so make sure you fixed your hair like I did. You look good, so thanks everybody. We just want to let you know that. So disclaimer, this is an educational series. We are not lawyers, we are not accountants, we are not financial advisors, but what we try to do is we share what we believe to be true and accurate based on our experience. And we always love an open discussion, question and answers. You can put questions in the chat. We'll always try to answer them if they're timely. And at the end, we're going to make sure that we have all the presentation done. We can do it. And we normally stay for another 30 minutes for chit chat. All of these sessions are recorded and uploaded on our YouTube channel. I'll post that link in a few minutes in the chat. There we go. So a little bit about Massive Capital. We're going to talk about, we got the value add investors and pastors. So we got the wrong thing here. We're going to talk about our virtual conference. Let's get moving to the next slide. Sometimes we miss a slide when we're updating. So a little bit about Massive Capital and Realty One. We're a vertically integrated real estate company. We specialize in ground up construction, retail, flex space, industrial, self-storage, and mixed-use multifamily. Massive Capital is an owner-operated for value-add multifamily. We have 40 years of experience with the Realty One team, 2 years of experience with Massive Capital, but that's not completely true because a lot of the partners have been doing real estate for 20 plus years. On the left-hand side, we're involved in equity, brokerage, and that's on the triple net space. So for those of you that don't know, that is mostly retail, industrial, office type buildings. Same with our brokerage, same with our property management. We do not manage our own multifamily. We do development, we do construction, both metal and wood. There's quite a big difference between the two. So one is more on the industrial side, retail, offices, storage, and the other one is a little more on the living humans, where people would build apartments, townhomes, or other things. And then we have an awesome education program. Alex, who's working with us, is on the call here. We'll give you a little bit of information about that later. So you can see we're very focused in Texas. All of us do live in Texas, at least the main core. We have people everywhere. We also have 3 assets in Denver, 2 in North Carolina, 2 in Georgia. And we're looking for triple net deals in the Florida and Arizona market. So if you look at Realty One, they have about 290 million of assets, about 500,000 square feet of retail, and about 250,000 of retail center, which is a little bit different. And then on the Massive Capital side, we have about 1,300 apartments. We need to update this slide. I think it's 1,500 now with closing on horizon, and we're very close to 200 million. You add those two together, and we're close to $500 million. It's pretty exciting to be able to say the billion word. I didn't think I'd be able to say that for a while. Nope, looks like the team behind the team. Oh, there we all popped up. So the team behind the team. So you'll see myself, Jasmine, Maria, Candace, Aska. Interesting thing with Aska, never met her before. She lives in Pakistan. We flew them all over for team meetings. Then we have Jonathan and Brenda. And if we go down to the slides, the third one from the right on the end, Bhaskar, he's worked with Sherrar for 6 years. They've never met in person, and he flew over and we had a big team meeting and it was absolutely fantastic. And you can see the rest of the team on the bottom. That is mostly on the development side with the Realty one, other than we have Ellen who takes care of all of our underwriting and works side by side with our students. So the Massive Capital team, we have Sherrar, Sanjay, and Mike. They are the principals of Massive Capital. And just for those of you that don't know, Sanjay is actually the first person I made a passive investment with 5.5 years ago. So we've been friends for a while, Mike and I for about 3.5 years, and Sherrar and I for about 2 years. So, and then on the Realty Capital side, we have Bo, Pat, and Alexis. They all manage the company for John, who is the owner. And like we said, they've been doing this for 40 years, very, very experienced. So we're super excited to be working with them. So we do have one opportunity. Oh, it looks like this slide got a little, so we closed 15 deals total. We got really butchered on the slides tonight. It's my fault. I was supposed to get them done and Sherrar bailed me out at the last minute.
It's just my fault. I wanted to kind of shorten that, but I was like, hey, 15 closings. That's fine. We stay.
Okay, 15 closings. We have a couple of pending LOIs out, and we do have our opportunity in Horizon. So we officially closed on it. I'm going to post a link in the chat, and also anybody who wants to find out, we just did a follow-up webinar last night. So we are still backfilling the raise on this opportunity. It is 204 doors in San Antonio. I was interested. I was actually in San Antonio last night, and Kelly and her husband Chip were there. And I said, it's not very many times you can buy an apartment from somebody and you still hug them. So it was a great turnover. They did an awesome job with the property. She's very interested in continuing to be involved with us, and that's Sanjay taking over the keys. So this one does about a 2.11 multiple of your money. We do have a 7% preferred return, which means the investors get paid first. And until you receive 7% on your money, partners do not get paid. And we're estimating a 18% internal rate of return, which is a very important number. And we'll put a link in there. You can get some information on that in a minute. All right, massive value add, group learning by actually doing. It's the
I'll take
biggest
it from here.
difference is doing it. I refer to it as watch the sausage be made. There are more better places to say it, but it's an amazing journey with Massive. So we're going to let Sherrar take over. I'll post a couple of those links that I talked about in the chat.
Trevor, thank you. Before I go to the next slide, what I was talking about is that group learning by actually doing, right? If it can you go back to the slide above, please? Thank you. So we all learn, right? We have to learn as you go through, and at some point, then there's some ways of learning, right? Group learning, solo learning, and then there are the different tactical ways to understand a little bit more. I always say, sometime we have to learn solo, sometime we have to learn as a group. We can bounce off of each other. And one of the beautiful things I love about the real estate is it is an upside down pyramid. We all work in the corporate world. It's a regular pyramid. Now you have to leave some bodies out the way for you to move up. But in the real estate, less we stay or play solo, it is more likely we're not going to go far, right? That's the beauty of the group learning in the real estate. And the second thing is the actually doing. What I meant is that I can go to YouTube University all day long. I can pick up the knowledge, but unless I draft an LOI, put that LOI out in front of a broker, it doesn't quite sit in, right? Folks, everybody who sent LOI in this call, almost half of you guys, there is a feeling that goes in your stomach when you send the LOI and you say, oh, damn, right? If that happens, right? So that's the difference between playing with an Excel file, understanding how it works, and at the same time, you go push the envelope and you put an LOI. You go in front of the broker and negotiate. You go call the associate attorney and figure out how to structure a PPM, right? And then how to create the capital stack. So for us, it's that. That's what creates the separation of it as we go. So, and the second couple of slides, I'll give you a slight glimpse of what's coming up on the back end that we have been testing. I would say we've been beta testing, and now we are bringing out to the public and with everybody else. So if you go to the next slide, As you can see, our themes is typically green. Now this is our theme, just to give you a backdrop. There's a massive mastermind that big thanks to the team, a huge thanks to the team, and also Mike Bailey and Alex, everybody else. So on the back end, we all, just like you, we started some time ago. We looked at it and we said, hey, there must be a gap. The back of the envelope calculation doesn't work when you buy a $20 million asset anymore. There must be something that creates some kind of a difference so we can accelerate our journey, right? So that's based on that perception, we started the massive mastermind. And then if you go to slide after, please, then we ask, who is that for? So this is what we believe that where Massive is going to come into play. It's going to be a private, highly vetted community for business owners, real estate investors, and the corporate employees who want to become general partners of commercial real estate assets, right? For us, life is tough. Real estate is tough. It is extremely competitive. Every mistake costs money. And there's 10,000 things we have to negotiate, and we are going to make mistakes. So if you don't have a right set of team, right set of partners, right set of tool, decent amount of tactics, it is tough. And the second thing is everybody knows somebody, but the relationship is not deep enough. When you call and you need them, they'll come back it up, right? So based on that, this is our thought, is that, hey, we need to have a highly vetted community who can really back you up when we need something, and who are closer to the deal making and we come in. So that's our massive capital mastermind, is kind of working on the back end. So we are really excited to have this. I wanted to show you these two slides, as a preview of what's coming on the back end of it. So, and if you have any question, reach out to one of us, and then we'll go from there.
And I did just launch a quick questionnaire. Those things help us gather information so we can do better presentations and we better understand who our audience is. So if you could take it, we would appreciate it.
100%. All those we collect, we do the survey because we learn. It's both ways. Today, I'm going to share all the surveys we did during our conference. That is a meaningful way. And for you guys who are attending it, it is important as well, because once you see those surveys, you kind of sort of see usually what works, what doesn't work, what kind of stuff that you want to learn. Because, we are unique in our own ways, but to the system, somebody has walked the path that we walked. So please help us gather information so we can learn from you guys and present it back to you, and hopefully it will add value to everybody. All right. And as you guys know, Massive's partnership is we grow together as a team. It's not a solo sport. And there are a couple of different ways we add value. And in the Massive Mastermind, there is some more to it. But in general, we partner with landowners quite a bit. From between the Massive and the Realty One, we bring in the debt, and also the capital and the resume needed to do the construction. So for landowners, which thanks to some of you guys that I see underwrote some of your assets, we partner, right? And we have quite a bit of work that's going on that particular space. The one of the LOIs that's pending, it is just like that. There was a team from the DFW area. They bought some land, and land took a price haircut, but it's not going anywhere. So we are coming together and trying to make that project work. Okay, the second one, please. And the second one is the multifamily. We do three ways we add value: asset management, capex, and credit enhancement. We have our own asset management software that we created that sits on top of the property management software that makes us independent totally to run an asset from the property management companies. Our approach is that when we buy an asset, that is our asset. That is our company. So at the leadership of the company, we need to know the assets more than the property management companies. Hence, we need to have a separate conversation or separate ways to pull the data to understand, right? So we created that about 6 months ago. It helped us to aggregate all of our 13, 11, 12 assets. And that way, when we walk into the property management company, we are looking at the property independently. Hence, we needed a strong finance team, which we have. On the capex side, we have an in-house GC company, and also we have a partnership coming out with the home builder. Between them, we can deploy resources to really get competitive price, and especially play on the speed side of it, the execution speed on it. And the credit enhancement, sometimes we'll co-GP with partners when it's a little bit more balance sheet and liquidity and experience. And the last way we add value, it is, oh, there was one more. Sorry, I'm off the slide, by the way. I don't know who's sharing the slides. Thank you. It's the education. So for everybody who's raising equity, have a platform, please. Don't do Excel file, and then have a platform, nurture the relationships, and you'll see how that the second round of information kind of plays out. So have a CRM. And for us, we use a CRM heavy. We are tool heavy, and tool is the way to move forward. And all of the investors that we have, we want to give them an experience. And then the same, that if you are GP, you're raising or you're communicating, have a standard ways of communicate, standard process. So teach them how to analyze you, and also you also let them know that, hey, I have a back office, and if so, my office will talk to you at all time. So if something happens to me, if I go vacation, something like that, my back office will run the shop. So have a CRM as you go. And then we have the GP Accelerator program, which I was sharing a little bit more. That accelerator program is becoming massive mentorship um, moving forward. All right, let's go to the next one. Okay, now it's gonna get fun. So I'll rather show you. So it has three sections, at least in my mind. The first one is I'll show some stat, and then I'll share with you a little bit more data that we saw, some of the interesting data points, spend some time on it. Then we'll get into some of the additional data about the virtual conferences. Uh, we shared this data, and a lot of folks, they're doing virtual conferences. And for us, one of their big principles is being transparent. At least so if you want to do it someday for whatever reason, here we go. You can go use those data and you can use for yourself, or it's really interesting to observe what happened, right? When you aggregate everybody's thoughts, you have a sense of it. At least you have a directional path. And we always say every statement has a kernel of truth. We just got to figure out what is the kernel of truth and see how that reflects, right? All right. So next slide. All right, some stat. So this virtual conference that we did, this was our fourth one. So we did, the first one was Q2. Sorry, I typed it wrong. We have little over 500 people signed, 245 attended, about around 70 attendees per session on average. 50% of the folks who signed in did not know Massive. Then if you click on one more time, all right, so Q4, oh, shoot, I typed that wrong. So we had again around, so we dropped down. So as you know, Q2 we started, market wasn't quite tanked yet. So follow the market sentiment, right? Coming out of 2020, 2022, getting in 2023, market sentiment was pretty prime. So Q2, it was, a lot of people came in. Q3, it kind of slowed down quite a bit, almost half. Then again, that's the stat. Again, 50% of the folks who came, they did not know us. It's around 48, 47%. So around 50%. Then we walked into the third one. Again, about 295, very similar stat. Very similar stat. So 150, 160, something like that. And then the last one that we have done, which is this one, which is 305 people signed in and about 155 attendees, 45 per session on average, 50% new. So what is interesting, look at number 4. So a lot of new folks are coming in. That maybe wasn't participating somewhere. New means that they did not show up in the Massive system. And it is interesting data point because we have done about 120, 130 webinars last year. So 150 times we came out in the public and said, this is what we're doing. And if someone did not join, that's a lot of data point, right? So what we're seeing also that a lot of new investors are investing now because their mindset is, which is a good one, this is the time to buy. I don't have any baggage, let me go come in, right? So that is interesting point. And the folks who are attending, the repeat ones, they are what we call it, the professional LP, right? They have done it, they understand the risk. They may have 1 or 2 projects, might take a hit, but they're continuously investing. So when you aggregate all the investments, it's gonna come together. So that's how we understand. And we also seeing a little bit more change in the sentiment where probably we have been through, at least we came, it's like a tornado was happening, it came in and we're in the middle of it. And in about 2 or 3 quarters out, we'll be out. So we are seeing the sentiment as well. Then, once you take a look at it, the question we have to ask, what does it take to do an event like that? Right? If you click one more time, this is for the stat that we have. Each of the events takes about 400 hours per session. So 400 hours 400 work hours that we put in as a team around to host a virtual conference. So it's a true team effort. It's a team effort, it's a tech effort, it's everything. Virtual conference one that we did, the software that we use, we continued it twice, third time, and then we also, the fourth time, we had a new software, as you guys have seen. The process was optimized. The coordination is different. So if we were to choose to do a hosting session, it takes about 400 hours per session. And it's about 14 of us were behind the picture continuously working on it. And there were lots of planning and failing. I kid you not, there was a lot of planning and failing, okay? So on that note, I want to say, if you stay on the other side, please, Jasmine. So big thanks to our tech team, big thanks to our marketing team, and big thanks to our new joiner. She's the manager of education and program management. They were the key players to make this successful on top of, I mean, alongside with all of us, right? The AXA, then Bhaskar, then Rimsha. Those are, I mean, those are the folks they really came through for us. This one, we had our team meeting. Everybody came in, and it was 10, 12 hours of a straight meeting. Right behind it, they were also knocking this one out. And some of the team members pulled almost 20 hours a day for 2 days straight to get there. So the point is, it's a lot of work. We enjoy it. We love it, as you guys can see it. And also on the data perspective, going back, a lot of new investors coming in, 50%, and the professional investors are staying in, and folks who are on and off, they're struggling and happen to be who had a bad deal, right? So that's the idea, right? Let's go to next slide. Cool. So next slide, I will get into who attended, how did they participate, what did they seek to learn, and what are some of the interesting data points. So here, if I could take over this slides, if that's okay, I'll share my points. I have a couple of things. So folks, and I'll give you guys a highlight, and there are about 4 slides I'll walk you guys through. One of the interesting part about this conference is you come in, you listen through it, and hopefully you take some golden nuggets. So we look for those nuggets as we go through, and also we want you to join and participate so you guys can see that as well. And sometimes that one thing triggers a thought, then that triggers some conversation, then that triggers some solution which is going to come back and help us into real estate anyways. So that's what it is. And the second thing, before I go in, whenever we create the agenda, our intent has been to give a 360 view, not just multifamily, but a 360 view, from multifamily to retail to new development to single family development, not single family flipping, but so with 360 views. Other way, if someone comes in brand new, by the time they go out, they will have some understanding of some of the terminologies across the asset classes by the time the session ends, which is also why when we come in, we bring in a lot of institutional guys, Greysteel, CBRE, JLL, alongside with what we do from our side. So this one was a blend between those. We shared some of the tools and tactics that we use, and we also showcase, as usual, the folks who are converting from a W2 and walking the path that we walked to become a full-time real estate professionals, and also the larger institution. So Greysteel has been our keynote speaker twice now. I know the CEO of the Greysteel. I know him, I have acquaintance. We talk here and there. He's really awesome guy, and I love the way he operates his business, and that shows through. One of the interesting part is Greysteel is they're data heavy. So when I ask for them, we always want to know what they're looking at, and they shared a couple of cool information here. The first thing is this slide. Look at their toolkits. Postdoc, Craigslist, LinkedIn, LoopNet, Track, and the Real Analytics, Yardian, MLS. Then they mix it all up, and then they make their own data set. So the point is, if someone wants to be a big shop, you want to have $100 million, $200 million worth of assets, you need a tech, a whole tech stack that we call it. Then you need to be able to stitch them together and really build a back end. One of the systematic failures that are things that came about, if you look at the silver lining for all the failed assets, they didn't have back office. It just showed up, and you go take a look at it. Just look at it. It's the back office, not having a back office, not having a strong foundation, not having a tool access, running on spreadsheet, that is a fantastic recipe for failure. When market turned, it showed up. So one of the cool thing about Grayscale, they'll tell you and all the stacks that they do. It's really awesome. Second slide is number 9. Okay. All right. So I'm not gonna go through it detail, but what they shared is that so they're Jack, he is in DFW. So when they came about, they shared some DFW information. Interestingly, so think about you have the state, you have the MSA, you have the city, and you got the pockets. And within the pockets, we buy assets. So when you come into the events like that, you could tell, hey, I'm buying a property in Plano versus West Dallas. What's my growth looks like, right? And as an LP, when you come in, as a GP, when you come in, it makes you much more, it gives you much more foundational information to analyze a pro forma, also to analyze or build a pro forma, right? For us, when we look at the rent, we split it 2 ways. Each of the rent has market growth and then has a value add component to it. As of now, for the year, for the market growth, it's flat to slightly negative, depending on where we at, but it's mostly flat. That coming in, I'm going to assume my rent is not going to grow. At least market's not going to push it. So I can push only way by increasing, by fixing, inside of the units, right? So this is one of the interesting, information that we liked it. They also give you sales price, and also get the growth. It's an interesting data point for you to know when you go. So again, this is DFW, but so many pockets, right? We own 2 assets, so we can kind of take that and compare with what we are achieving, same thing, right? So very similar DFW market performance, and they gives you an anchoring point. But again, here, the interesting part is not all sales are made the same. So you have to kind of see what would that look like. So it's just like this way. What we saw it, cap rate is great, but everybody's cap rate is different. If you do your model and you get to a cap rate, if I do the same model with the same input, I will have a different assumption and cap rate will be different. So when you come in and take a look at market sale per unit, which is good, but I'll leave you with that. It doesn't really matter. What it matters is the dollar per square foot that we're paying. Example, San Antonio, they always have smaller footprint, and they just have a smaller footprint, right? 600, 700 square footage per unit. DFW area, they have more on average, right? So if you take a look dollar per unit there, or price per unit there versus San Antonio, will be different. But so you got to go down one more layer. Well, what's my dollar per square foot that I'm paying? Because that's how we collect checks for the rent. So everything normalizes into dollar per square foot for us. So, right. And then other one that I thought is really interesting is this one. So what it tells us, this is the market growth forecast by, rent growth forecast by market, number 1. Number 2, it's what changed. So now if we're an investor, we get asked the question, where I have the biggest, so think about it this way, our role is to find projects that has more value. I can create values, I can create more revenues, hence we can give it to somebody else and they can create more revenues, right? So multifamily has always been a revenue game, not a cost game, right? We're not gonna get to the cap rate we want or NOI we want by cutting cost. As long as you're cost efficient, not perfect, perfection is tough to multifamily. So as long as you're cost efficient, but the revenue growth is clear, that's a good deal, right? So on that note, if you're an investor, you want to go where the construction, so the whole reduction of the rent happened the most, you have the highest amount of upside, right? I'll give you an example. Look at Las Vegas. They had a negative change, but they have 4% growth. From here to here, it's around 5, around 4%. So if I go buy an asset here today, I have a more of an upside, you're in a better spot. Versus you go Orange County, where the reduction didn't happen, it went up, and growth isn't much. We have only this spread. Versus if you go Las Vegas, you have this spread. Keeping all things equal, where would you go buy? Right? So I thought this slide was really interesting. It gave us a lot of insight. I loved it. And if you take a look at it, this is also interesting. We'll take a look at how much market's gonna give, right? If the market gives you more than what you can achieve, we're gonna double down on the rent growth as you go. So that's that. Now I'm going to go to the Zoom information. This one was really awesome. Okay. All right. So this is our stat. Now I'm back to the events. We have 306 attended, and that we did surveys. And this, we're going to spend some time on the surveys. So I found it very meaningful. I'll explain a little bit more how we think you can use looking at the data. So polls. All right. Let's look at it. This is the asset management strategy poll result, right? So we asked the question. Okay, sorry, I didn't show up on this one. Okay, no, that one, sorry. Okay. So this is the technology. We had the very end of the day. We talked about our tech stack and what we do, how we go about it. So we have 11 responses. The question was, do you have a CRM set up for investor relations? Like 60%, 65% didn't have a CRM or no, I need to. I'm assuming, do you have a CRM system for investor relations? That means you're raising, right? To me, it's a risky proposition when you're in the raising, but you don't have a CRM. Okay. That's one. And the second thing, we asked the question, do you use virtual assistant to improve your business? Assumption is whoever answered, they will have a business. No, I don't need to, which is fine. 18, 20% of answer. Look at that, 50%. Okay. So about 50%, like interestingly, again, 65% didn't have a CRM. I'm guessing that 60% didn't have assistant, virtual assistant as well. So have a team. Have a team so you can do what Jasmine calls it. You can keep the main thing, right? And have a team member. That's the fastest way to get a team member, right? Then we ask the question, I need a CRM for a business other than capital raising and investors, which is good. That means CRM is not for capital raisers only. It's for everything you do, right? That was our hypothesis when we came with our website, mms.capital. We gave our database to everybody else. So it's a data first model, which is whatever data that we bring in, it needs to be able to talk to our websites, to be able to text and email, all the kind of other good stuff. So have a CRM, have a process, and you can do. And this one was pretty cool. Did you know that all this tool? So for us, we're tool heavy. Whatever that we do is tool first, human capital second, so you can amplify you do. So if you are growing shop, or if you're investing in an LP as an LP to a general partner, who I would say give or take $50 million or more, they should have a back office. They should have tools on all those kind of other websites, and that kind of comes with our massive mastermind. They get RedIQ. RedIQ is the coolest thing ever, and we use Monday.com. We use our own CRM. We use Cashflow Portal and Synthesis, bunch of other stuff. So that's again. I will go through quick, then I'll come back and answer some of the questions you may have. So that's that. Now, where is this one? I want to talk about underwriting. Okay, underwriting poll. We asked the question, where is your journey in underwriting? We tried to polarize the question. We like to polarize, kind of extract, give you some answers that if you do it, it'd be awesome. So we asked the question, I'm an expert and we have underwritten hundreds of deals a year. And that's the question we ask. And then we give it the polar opposite. I do not know anything about underwriting, which is a good thing. I know what he answered. And then what is underwriting? It's a question. So you can see those 50% of the folks who came in new, a good chunk of them needs to go through some kind of education to underwrite. And this is a very good response rate where everybody, we can underwrite, but we need a deeper understanding. So on that note, when you're an LP, know, at least understand how the money flows. It's a good thing. And then when you underwrite a pro forma, look at the team, you ask the question, hey, I get the underwriting, but how do I know what numbers being inputted in? And I can understand the strength of the number being put in, right? For all the math folks out there, what we call it, number's a number. If you don't know the standard deviation, we don't know the strength of the number, right? So understanding the underwriting is different. Also, this is where it gets interesting. We tend to think I have to have an asset local so I can say I know the local area, which is true. But you can also underwrite so many deals in the local area, like it's so many, and create your own database based on the actual data, so you can behave like you own those assets locally. That's where RedIQ comes in. In our database, we have over 700 properties. We stored all of the actual data. So without being there, we're there now. Second one, we asked the question, how do you underwrite? They don't spreadsheet by hand. Michael Blank says to you. That was really cool. So kudos to Michael Blank. And that's a good tool. I like it. We use synthesis. Then RedIQ, not a whole lot. Need to figure it out. So if you need help to figure it out, get the synthesis, like $300, or Michael Blanc, you can buy that. But this one, to me, it is dangerous. It is okay if you do single family, right? Yeah, but if you start buying multifamily, you may be the best modeler out there, but the issue is going to get into who's going to catch if there's a mistake in the formula in the Excel file. So you want to use something where everybody's using it and they cleared out the issues in the Excel file. Last thing we want to do, build a model, which I believe I can put data modeling, fantastic. It can do wonders, but God forbid I made a mistake and it spit out a different answer that I wanted and I didn't catch it, right? Because I built it. So we always recommend don't do yours, use somebody else's so you can get a tool that has been vetted out and being vetted out by everybody. So more people use it, it's better. Then we ask that what do you solve for underwriting? This is interesting that they all solve for everything. So I'm not sure that's a good thing. Typically, if you go for cash flow, you get the DSCR. If you go for the velocity, you don't get the cash flow. If you want to go for the cap rate, you may not go for the cash flow. So it's a mixed plan, but this is good that our audience know most of this stuff. Underwriting help, you see it, which is good. And then for us, deal and deal flow, yes, no. And so one of the thing, that massive when we started, we said whatever that we do, we must not have a issue with the deal flow. We just have, that's the one of our big belief when we came in 2022, and then it went even more. We debated so much, but our goal for first year in the business was we are not going to call brokers and still do deals. It's tough. We have done deals without calling the brokers. None of our partner made a phone call to any of the brokers the first year, and we have done 5 deals. That's also because we have done many deals before, so we have some relationship to get to that point. That is not possible for new joiners, but have a plan where you're going to get your deals. And massive, we have this amount of deal flow. We have over 30 deals in our pipeline right now. That's that. So it was an interesting one. New construction, I'll go here. Oh, right here. So we asked the question, how do you want to invest in development? It's bullish. This was interesting. We thought coming in that some investors may not want to invest in new development because this has a different kind of risk. Plus, in our team, we kind of grew up in the multifamily side, but Realty One has a new development. We have done the Austin. So this was an interesting data point for us when we looked at that. This was another one. Do you have land that you're a partner to develop? We're not sure who to talk to. Yes and no, because most of our investors came in from the multifamily side. It's okay. And I'm buying land. Pretty good thing to see. And then we asked the question, what type of development do you want to partner invest in? Retail, built to townhomes, multifamily, flex space. And it is interesting. Multifamily dominates because market is big. It does it. And you can see they built to rent townhomes. It's going in, but it's kind of very less projects there. And the retail center is still strong. One of the strongest one now in the retail. And then the flex space. Flex space came, I think it had their time. Now you kind of, stabilize that quite a bit. And then this one. Okay. Equity raising, the folks who are raising equity. We asked the question, how many of you guys have raised money? There's quite a bit of folks raised quite a bit. So 50% of the population raised less than $500,000. And then on the other side, we have 5 million plus because we have some really good solid GPs that we know. So that's quite a bit. And then we have 21 for that the people didn't raise before, but they want to learn. On that note, equity raising, it's a business by itself. It's a vertical of the process by itself because you will be acting as a money manager. So you got to manage somebody else's money. That assumes you know where to place the money. you know how to underwrite deals, you know how to vet a deal, you know what's going to happen for the next 5 years, and you have a backup, something were to happen, the business will continue. This is also great to see how many people they raised. You could see it's there, but we could jive with it. That's because deals are tough to come by. Deals are very tough to come by, and continuously coming by, it is even tougher. Let me ask the question, what objection do I get for raising today? Very standard, very standard. And what the market does, yes. And this is where this is like a telltale sign for what we call it our best friends, professional LPs, right? Because I'm an LP as well, so I invest. And so most of the folks here probably they've invested up until last year. The market turned a little bit, maybe something out there, and a good chunk will be new coming in. They're just waiting it as you go. This one we saw it before. So for massive side, we like to play together. So every project that we do a 506B and we do a 506C. It's a standard process. So everybody gets to participate as you go. Okay. That's good. And then we asked the question, last thing is that, would you invest in a debt fund to pay 10% return annually? Overwhelming answer was yes. So that's where we're at. We believe returns are great, but a portion of the portfolio for some of the folks would be steady state as you kind of go through, then you kind of go. New construction. Okay. I wanted this one. So those are our overall there. And hopefully you all enjoyed it. And I'll go to our questions right now, see what we have.
No questions in the chat. I'm the only guy messing up the chat.
Oh, hold on. I have one more Excel file.
Yeah,
so
we just hit 51% on our last survey. We'll pull it down in just a second. Thanks everybody for participating.
And on that note, the most amount of engagement we had is the tools and practices session. We had 300%. That means every attendee, there were 3 questions. Second most one we had is the GP path to general partner. Every one attendee, we had 2 questions. And then asset management had the third most. Every one attendee had a 1.2 questions. So the focus perspective, tools and practice and underwriting, it's a big deal. That was one of our biggest takeaway. And how to become a GP, that was the second biggest focus point. And the third one is asset management. And that was a key engaged session from there. All right.
Awesome. So if you have questions, feel free to raise your hand, unmute yourself, put it in the chat. We love questions. Half of the time, they only get better as the questions get better, our presentations. And it's good to see. I know there were several of you. So for those of you that don't know, Natasha shows up at everything we have. And I actually saw her in person at our meetup in Houston for the 3rd time, I think. So it was great to see you.
So that's the first
It's
one.
always good to see you too.
Natasha, thank you for coming. It was really awesome seeing you. And for the love of God, I was thinking you were in Austin. I don't know why. But hey, I know you're in Houston. I know you're in Pearland. It used to be my old neighborhood, so 100%.
Yes. It's always great to see you all.
So, all right.
Awesome. Any questions? Any thoughts?
There's a lot of data today.
Yeah, we can, and it can be.
Yeah, there was quite a bit of data. You had an interesting chart on rent growth. And there was little red lines spread here or there. I didn't quite understand what the red lines were, because it looked like there was a lot of differentiation between different areas.
Right.
Yeah, that one. What
Yes.
are the little red lines mean?
So, all right. So let's say you're an investor, right? And you need to buy assets. And we're gonna buy assets. If we're buying today, what should we do? We're gonna go and understand where do I have the most amount of spread, right? So I want to let's use an example. Austin right here, right? So let's use Austin and Charlotte side by side. Austin rent growth went down today, right? So coming in today, this is gonna be a rent, let's say $2 hypothetically, right? Or let's say $10. And from here, you have this much growth you could have in Austin market if you come in today.
Okay.
Versus if you go to Charlotte, you will have this much. So
I see.
keeping all things equal, what would you go buy?
So basically, you're showing sort of two percentages there, two different numbers.
That's right. Yes.
And the appreciation, it's interesting. There doesn't seem to be a heavy correlation between the different, rent growth and appreciations. But it is interesting to know, if you're saying, oh, look at that wonderful rent growth, and then you say, oh, the appreciation is low.
Yes. So let's use
So
that
if
example.
if it's low, that means that that's basically a number. Say, let's take Orlando. That's 2.8% rent growth, but you've got this little red line out in the middle of nowhere. So that means that the appreciation is not that great.
No, other way around. So what
The
we're
other way
saying is that
around.
if
It's got a
if
lot of room to
that's
grow.
right, that's right. That
Oh,
remember
okay.
every
I'm
rent growth
sorry, I
has two
wasn't
things.
quite hearing that.
Okay, it's the other way around. So you're looking
Oh,
for
okay.
as wide as you can.
So you want the red line as far to the left as
Left.
possible.
That's correct.
So
Aha.
Austin is
Now you're
great.
thinking.
Yeah.
That's right. So do I
Yeah.
buy like my rent went up today here, and
Okay.
then max I'm gonna get 2.8%. So Chicago tapped out.
Okay.
I have no room.
So
Right?
Las Vegas has a lot of room to grow.
Yeah. But okay.
Whereas Orange County, it's got great rent growth, but not much appreciation to grow.
That's right. Now, again, visual interpretation. Las Vegas is here, right? Let's look at the line. Let's see, let's just assume it's a fraction of 1.5 points. So from here to here, 3.9 plus 0.5, 4 point, we're looking at
Okay.
what? So 4.5, almost there, right? Let's say it's 4.5 for simplicity. That's one in Las Vegas, all right? On the flip side, you go buy in Orlando. You got the whole 3% plus 2.5%. So you got about 8% out there, right? Sorry. You get about 3 plus another 3, almost 6. So Las Vegas gets you 4.5% possible spread.
Right.
Orlando gets you even bigger spread.
Yeah, even.
So
it's you kind of, depending on, of course, where you're most important for you. If you're doing a $10 million property and you're going to get a heck of a great growth, maybe 2x, 3x, something like that, that would be just wonderful in the long term. So it depends on whether you're hungry for cash now or later.
it's the whole idea that you want to be on the side of the market. You don't want to get caught like Chicago. Rent already went up and you also tapped out.
Yeah.
So that's the idea.
That's right.
That's the beauty of this slide. I loved it when I saw it. I was like, whoa, why didn't you give it to me last year, right?
Right.
I'm late.
Yeah. Yeah. Well, that's true. Well, thank you. Thank you for explaining that.
No problem.
And we'll get a recording on this so we can go take a look at that slide.
That's
Right.
correct, on our
that's right.
YouTube channel,
Okay.
which I posted there. And Dennis has a question. Rent growth is a current number and the peak appreciation is a 4-year forecast, correct?
That's correct.
He paid attention at the webinar.
4-year
No, it says
forecast,
4-year
okay.
forecast. It's right. Good idea.
saw
Now
Dennis,
it
he
sucks
was saying-
for it sucks for the current owners who had the most amount of left, right? It's just bad. And then it's that, right? So think about Orlando. They not only had a rent reduction because it went up so fast, but also the insurance. It's a double whammy, right?
Okay.
So
Well, thank
good
you.
question.
Appreciate it.
No problem.
Awesome. Any other
Thank you.
questions?
Awesome.
And lots of folks there. Thanks for coming. I went to a meetup in San Antonio last night, had a call at 4:30 with Sandy, and she said she cooked dinner for her family early so she could show up here at 6. So that's dedication. Thanks, Sandy.
Now, I think on that note, I think we're planning on having our virtual conference in May, probably. And then there's a one in person coming up in Houston. So we are figuring out that portion of it. So more exciting things coming up soon.
Well, it says a lot about you guys taking the time, obviously a lot of time for that conference to share what you've learned. Appreciate it.
And look, thank you. We learn as well, right? It's so much learning that happens, right? That's the one thing that happens. And and it hurts, and it hurts. I mean, if we look, money is money, and we got to respect LP investment money. Somebody's losing it, but it's somebody else's hard-earned money, right? And it is
Right.
sad to see sometimes I'm not in town. I'm looking at the price, making some assumption, and I'm thinking I got the deal, and that's a good deal to me. And then you live in that town, you're looking at it like, what the hell, right? It just it's tough.
Yeah. Well, there's an old adage: if you really want to learn something, try to teach it. And then and you learn both from the study that you have to do because you keep challenging yourself, plus all the other input you get from your students. So
Yeah,
it's great. It's a great
Thank you.
win-win situation you've got going here.
I remember my math professor, Cal 3, those limits and the 3Ds and everything else. He always said, if you can explain the concept verbally to somebody and solve it by words, you got the concept.
Right.
Like just walk it through. If you can verbally walk somebody through from A to Z, how was the approach of solution, then you got the concept. Till then, you're memorizing it.
Right. Yeah.
So.
And reinforcing it is important too.
Yeah. Yeah.
Well, great. Thank you.
No, well, thank you. Awesome question.
So I missed a little bit, but I looked at the chart. You don't have anything on the chart showing Phoenix?
No, I don't see it. Let me see. No.
Yeah, I didn't
It fell
see
off
Phoenix.
into Mexico. Sorry.
I didn't see Phoenix on there. I was just
That's it.
curious because I'm looking at a few things in Phoenix. That's the reason I was
Okay.
asking
Okay.
from a
The
rent
Phoenix is
standpoint.
going up. Yeah, the Phoenix is coming up, but also what happened? Phoenix market went up, right? Phoenix behaved very similar to Denver or Colorado market. It
Right.
went
My
up.
sister's in Denver. So that's the reason her and I have been trying to do stuff, and she actually started looking at stuff in Phoenix because of where she was in Denver. So it looks like they're doing the same exact thing, right?
Yeah. Yes. Denver is so cool. If you look at city versus city, I know I like to analyze the city, and cities has a characteristics and they behave a certain way sometimes, just like the human, right? And
Right.
so the Colorado market behaves very similar to Phoenix market or Arizona market, and then those two market behaves. They will behave very similar to Austin only,
Right.
not the whole text, Austin only. So it's kind of cool how you take a look at those markets.
So
Okay.
I put one in the chat here too, to make sure that we talk about the SHE event. And just to show you how dedicated I am to the SHE event. This is getting to be so fun. This is me in a wig. I showed up at their event to surprise them. But any ladies on the call, check that link out, and make sure you join the group. Every time I send somebody there, they send me a note saying, wow, what a great group. And Jasmine and Maria. And for those, I talked about earlier, we have a lot of WhatsApp chats. So their WhatsApp chat, it's called chat with me. It's called Trevor's Angels. So they
thank you so much, Trevor.
They help me. Yeah. And
all
we have
the
our first
ladies
one
who-
coming in Detroit. So if there's any people that live in Detroit, first of all, sorry. Secondly, go to the SHE event.
Yeah, we have so many events. Last weekend we were in Houston and Austin. Brenda and Ellen hosted one in Austin. It went really good, and most of the attendees were Trevor's friends. So thank you so much for all the support. Send your wife, your daughters, your everybody. It's a really good group. Yesterday we had an amazing speaker, and all the ladies get valued. We try to have speakers that help you grow either personally, professionally, or spiritually. So great community. Thank you, of course, to Massive Capital, because we couldn't make it without them. It's a lot of support that we receive from these guys.
Yeah, it's
Good,
one
that's
of the
working.
coolest things with Massive Capital is the desire to create communities. Communities that help, support,
Right.
educate, learn. It's definitely a huge mandate. It was the reason I joined, right? That's why I picked my own title, Investor Engagement. I just because that's a way to give back. So I'll have a great time. Awesome.